All righty, guys and gals, this is Blake Morrow. You are listening to Face 2.0. It sounds so funny to say that. So, hope everybody's having a great day. Glad you guys can make it. We are. I was just looking at the euro. The euro just popped here. Looked like a little squeeze. I think if people were short, they were just kind of you can see we just kind of squeezed past some resistance, and I think anybody who was short intraday has had some stops up there. I don't think the picture has changed with the euro, and matter of fact, we're going to get started with the bias chart. So resistance today is 120.60. That's pretty key, and I'm gonna denote the euro dollar as being in a bearish trend, just so you guys know. The reason why, let's just be clear here. This is the neckline of the head and shoulder pattern, or however you want to look at the euro. We are below support, what is held as support at the 120.60 level. And it's also, just so you guys are clear here, I know I blogged about it yesterday, but I just want to make sure I reiterate if you guys can see this. This is the 38% retracement. So the close yesterday below the 38% retracement is bearish to me. Okay. So I am, and as I told you guys on the Face webinar, I am expecting a breakdown. I'm not sure if it's going to come today, but if we break through 120, we have to assume at this point we are dropping from 120 to 119.20. So I'm going to write down both those numbers because I think you have to be prepared if 120 gives way. And I'm going to actually put an asterisk here because I don't know if that's going to come out. Yeah, it's close. Here, I'm just going to, you know what, I'm going to get rid of this 0. There we go. So I'm putting 120 with multiple asterisks because you guys know I do that because I want you to know how important it is. I mean, all eyes are on the euro right now. That's it. And if the euro breaks down, it's going to cascade into other dollar pairs. And that's why I didn't want to get too deep into it on the Face webinar, because obviously I wanted you guys to have special treatment here. I want you to know how I feel about the dollar, because if the euro breaks down, there is a very strong possibility. Well, I would think that the cable breaks through 136. So you got to think about this if you're trading these, right? So 136 right now, resistance is going to be right here in the cable, which is 137.15 roughly, 137.10. Okay, so 137.10. And you know what, let me I need to put up the just, where in the heck is it? I'm just trying to find any, not Q&A. I'm trying to find the, give me a second here, guys. I'm trying to find the button for, where are all the comments? Not in the Q&A. Where is my chat? I don't want that. Sorry, guys. Just give me a second. I usually don't look at the Q&A panels. I just don't, because they're already they're being addressed by everybody else. But I'm looking on my screen and I cannot find it. Remote control, no. I want to see. Oh, here it is. Okay. I got the chat box up. So if you guys have any questions as we're going along, I'm going to try to glance over and take a look at it. And then Steven Stelios will address anything else that I missed. But so let's write down 137.10, 136, really critical here for the cable. Okay. And we break through 136, it turns bearish for me. Aussie. Now the Aussie, I think that the Aussie closing below this 24% retracement was a big deal. I actually wrote that in the basic technical analysis from yesterday. But let me go ahead and get rid of this for now. Actually, you know what? I'm not going to get rid of this for now. I'm going to remove that for now, and I'm going to put in this. Okay. I think that this support, you can see how we've been respecting it the last two moves higher. So that comes in at 76, basically 76.60. We have to hold below that. But I think the path of least resistance right now is, believe it or not, it's lower. And I think we're making our way down to like this 30. This is a minor 38% retracement. I think overall we're going to be moving towards, you know, a longer term 38% retracement, but which takes us actually below 70 cents. But that's you know, obviously not right now, not what we're dealing with at this moment. Support will be, I mean, this is like this is in no man's land right now. Oh, by the way, let's look at that. See, that's a 50% retracement too at 76.64. So yeah, that's probably more important than I thought. 75.65 is going to be support for now, but it's minor. So 75.65 will be, that was yesterday's lows, right? Kiwi. Now, Kiwi had strong employment data. It ripped higher. It sucks because I got out of my Euro New Zealand long. I got out of my Pound New Zealand long, and and it's just so frustrating because my Pound New Zealand was really profitable, and it turned into like little profit, and my Euro New Zealand that was profitable at one point turned into a loss. So it just ended up being really frustrating. I didn't re-enter, although I do feel that the Kiwi is struggling at trendline resistance. This is the wedge resistance. So while we're below 72.25, you have to keep it in consolidation. You can't turn bullish, right? So we got to keep it in range. I was tempted to short it last night when we were up here at 72.20. I didn't, because it's like, all right, well, I'll just focus on the Aussie short for me personally. But I mean, technically I should have. I just didn't. I do think that support today, we have to write down two levels, which is 71 cents, which is obviously critical, but 71.50 is also going to be pretty key support. Okay. Which, I know we went as low as 35, but you can see all the spike lows right here around 50. I think 50 is going to be equally as important on the way down. I'd rather let the Kiwi just kind of get out of its wedge, or I have to be pretty convinced that stocks are moving lower, which I'm not convinced about that at this moment. Dollar Canadian. I have to say, guys, the dollar Canadian, super, super impressive, considering stocks are, crude is moving higher, right? That's really impressive. This means this doesn't matter today. Looks like, actually. Okay. Anyway, the dollar Canadian, I mean, I don't want to buy it right now, but let's just say, the euro rolls over and breaks down. I mean, if it does, maybe that's a catalyst that drives me into a long dollar CAD trade. I think while we're above this trend line right here, this broken trend line, which basically you can just even say it's a spike low here at 127.35. I doubt we'll see that today. We have all this support right here at 127.60. That looks more relevant. But but what I wanted to say is, while we're above this trend line, I think the risk remains higher, right? But look at how spikes up to the 127 or 128.70s are just being faded. So I'll write down 128.60. It's just not great resistance either, just as this is not great support. Right. Okay. Dollar Swiss. So the dollar Swiss is holding up really well. It's not, you know, the thing about the Swissy is it's not even giving you a chance to get long or add to longs. That means it's not giving any shorts the opportunity to exit. That's, you know, something, because we may depending on what happens with the euro here, we may, you know, do this and work off all these overbought conditions here on relative strength. But man, I'll tell you, I would hate to be short Swissy right now. It definitely it can't feel good, you know, if you're short. But we are knocking our head up against 90, and that's, you know, worth noting. I think it's bullish right now. And above 90, we have 90.30, which is the 50% retracement, right? So support. I mean, it looks like any dip right now back to 89.70, but I mean, we'd be lucky if we got back to 89.50, I think. But we might, you know, you never know. I mean, because this euro is not breaking down either right now. US dollar, Norwegian krona. This is one of those that you guys got. This is one of those, if the euro breaks down, your eyes have to come here, because we have been capped by this massive trend line and previous support. I mean, it's more the trend line, because you can see how the spike up to 870 really got rejected. You know, the fact of the matter is, if this thing can break above, I think if we can really clear 866, that would be really bullish. So now support for the US dollar, Norwegian krona is like 855. You can see all these lows right here. That might give you another look down there. We're going to keep it range for now. Dollar Mexican peso. Traded really heavy. It's traded. I mean, look how heavy it's trading. But we did hold the 50% retracement overnight. Stocks continue to rally. You know, and the dollar Mexican peso may try to find some support. I have orders. I'm actually long a little bit of dollar Mexican peso from yesterday at 2022, I think is my average. But I really wanted to add below 20 down here at the 618. I don't know if we're going to make it down there, but I'm going to write down this 1997, then 2007, because that's pretty much the lows from here. Resistance right now, I'm going to write down 2020, and then, because 2020, you remember, that's just a real big pivot, and then 2030 again. So just in case we do get a spike up. I just think today's going to be a little bit benign until the euro moves. So the euro's in the 60 pip trading range, and until we move out of the 60 pip trading range, I just don't know if we're going to see a lot of FX volatility. I may be wrong though. You know, it's the days like today where I don't expect anything, where it can happen. So, you know, dollar yen. I did have a short on the dollar yen, and I just closed it for break even. I was short from here yesterday. The 618 retracement, I just took it off the table, but that doesn't mean it can't go down. I may have been a little just premature there. I was more of like, I don't want to look at it anymore. But you can see the 161% extension. So I'm going to write down 105.20 and then support these spike lows here at 104.80. So just kind of 480, 105.20. I know it. I don't know if it really even feels like right to be on, you know, bullish for right now. But I guess while it's above 104.50, we can probably keep it in bullish, because it is beyond the broken is a multi-month broken trend line. So yeah, there's that. But as I've told you multiple times, I really don't know how to trade the yen, so I'm just kind of staying away with it. Equity market's just open, just FYI. And we're going to look at S&Ps in just 1 second. Let's look at the dollar index. Here's the dollar index, just kind of floating around. Support, the neckline is going to be at 90.80. Resistance, 91.20. It looks like 91.27. Is that right? Oh, 91.25. Okay. So, because if we break 91.25, that means the euro's breaking, right? So just think about that. So 91.25, that would be key. We are bullish right now because we have this inverted head and shoulder pattern. So while we're above 90.75, just hold on really quick. Oh, that'd be an interesting read. Okay. What was I gonna say? Oh, 90.75. While we're above 90.75, we have to, that's our inverted head and shoulder pattern neckline. Okay. Let's take a look at gold. I'll look at, I'll take a quick glance at silver. As I told you guys yesterday, the big risk for gold, and I'm going to get rid of this. Everybody's looking at this inverted head and shoulder pattern, or we were. I don't say everybody. We were looking at this inverted head and shoulder pattern, but the fact of the matter is when silver came down, okay, and silver is in a big, what I feel is a wedge. So I think silver is going to have support down here around 25. Gold, I mean, if silver slumps to 25 from where we're currently at, there's a risk that gold pushes below 1800 back down towards this support right here, this 1765. So I would be a little careful with gold, especially if silver sold off. Okay. For now, we have support at 18. I mean, I guess it's pretty much the same thing as yesterday. You got to write down 1800, obviously, but 1825 ish, which is right through here, roughly, or 1820, I guess. Let me read. 1820. Resistance remains at 1875, just in case we start rallying. 1875. And then the S&P, oh wow, we just broke new lows. That's interesting. That never happens. Yeah, it's probably not sustainable. But you know, I do want to say this regarding the S&P. I know it's so hard to be short. It's so hard to be, you know, bearish. And I agree with what Mark Newton said. You know, all this excess money coming in, or all this random money coming in the market, is usually you know, it's one of those things that's just a culmination of things that are really telling me that we are really close to a top. Way back when I was, you know, in my 20s and trading equities, you know, in my mid to late 20s, when I first started my trading career, back in the mid 90s, you know, guys would tell me, the senior guys, the guys you want to listen to that have been around for, you know, 20 years or whatever at that time, they're like, man, when you see this massive volatility, you know, you have to point out massive volatility, you know, in the indices, it's usually, you know, we're getting close to an inflection point. You know, these big wild moves that we're seeing in equities. I mean, I pointed it out yesterday during the daily roundup, but let's just revisit this really quick. This is a 4% drop, a 3% rally, a 4.5% drop, and a 5% rally. I mean, how are you supposed to reconcile that in your head, right? When that kind of stuff is happening, you have to be really careful. I think we are probably, wow, Euro's really ripping here. We're probably closer to a, you know, a top than most people believe. So, you know, does that mean you need to go run out and short the stock market right now? No, not necessarily, but I think we need to be really careful. You know, that there's a lot of, I should say, dumb money that's coming in the market. You could have said that for the last couple of years, but you know, a lot of people are taking risks that shouldn't be taking risks. My two nephews called me over the weekend, or on Friday, excuse me, Thursday last week, about GameStop. They're 21 and 22 years old. They wanted to put all their money into GameStop.
At least, Blake, they have an excuse. I mean, age-wise.
Yeah. I know, but it's just like, but this is the type of stuff that's happening that really, you know, is very scary. It just really is. So you know, and again, I just want you guys to think about those types of things. For intraday, what we're going to look at as support for intraday is 38.20. Below that is going to be 37.80. 37. What did I say? 37. 37.80. 38.20. I just want to make sure I got that right. Yeah, 38.20. 38. Oops. Dang it. I keep, fingers are not working today, typing wise. And then resistance, I think this trend line right here, it's, you know, you say, oh, it's highs, but I actually think it's descending, and it might be just like that. But I want to write down 37. Oh, and you know what? That's probably an 88% retracement now that I'm thinking about it. Oh, no, this is. So let's just say 38.55. It's crazy. But why not? Why not go up there, you know? And we're definitely in the range. I mean, it's a wild range, but it's a range, and you just have to be respectful that we're at probably the upper end of the range. All right, so the bias chart's done, guys. Steve, Stelios, I'm gonna let you guys take over so I can get to trading. And everybody, I hope that the bias chart, this type of analysis is good. Dimitri asked about the euro pound descending wedge, and I know you had some opinions, or you probably have some opinions on the euro sterling, Steve, that you might want to answer there.
Yeah, mate. Absolutely.
Okay. Cool. All right, guys. I'm going to let Steve and Stelios take over. Good luck, everybody. And thanks for your support, as always. Really appreciate it. And I hope you're enjoying this more personalized, face experience. And remember, make sure if you guys have any questions about something, I can almost guarantee Amira's going to ask you about Palladium. Almost guaranteed.
Absolutely, mate.
All right. Talk to you guys later.
Bye-bye, mate.
Thank you, Blake.
Thanks, guys.
All right. So hold on. People are sending me messages. Stop sending me messages. Okay. What did we not mention in phase 1.0? It was a couple of data items that I wanted to mention. First of all, we got New Zealand employment numbers, which came in quite a bit better than expected, but currency did nothing. So there you go. It shows you how much the markets are paying attention or putting any weight on that. But still, employment numbers, that's, that should be important. But anyway, today we had PMIs, various PMIs, service PMIs from Europe and the UK. And overall, it was better than expected, with one or two small exceptions. But, overall good numbers. And we are still in the 40s, though. So it's still in contractionary environment and deep contractionary environment. But I guess the market's expecting certain numbers is coming in a little bit better. So it could put a positive spin on it. Maybe for equities, they need any kind of positive spin they can get. And but apart from that, I mean, we talked about most things on the first half hour, so I don't have much else to say regarding overnight items. And the things I am looking at, as I said before, is the euro and metals as well. I want to add more I want to add more silver lower if we get
I'm
there.
still looking at this chart as well, still. I'm still short half of a position from yesterday.
Yeah.
I actually want to see if the S&P will respond lower to the dollar move. From a risk reward perspective, I think it's a great proposition. I mean, yeah, it is counter trend. There is no disagreement to that. I mean, nobody can argue that. But from a risk reward perspective, and given the previous turn lower, I think it's worth a shot. So I'm risking a little to see if we can actually have some kind of a cascade here. I think there is an okay chance.
Very difficult time move lower in equities. I mean, it's just this grind higher, and any dip just gets bought as if it's
Yeah.
the generational low. So
it is unnatural. There is no question about it. I mean, I think there's nobody that can argue against that. I mean, it's totally unnatural.
Speaking of unnatural, we've been asked for natural gas, so maybe you'll have a look at that afterwards, after palladium.
Yeah, absolutely. Absolutely. Now, Blake pointed out, he wasn't here yesterday, what I said yesterday, meaning the divergence between USD CAD, USD NOK, and the breakout in crude oil, which is making this move. And in my opinion, as long as this divergence is persisting, it is an excellent, perhaps, indication that indeed this move higher in crude oil is probably terminal, in the sense that it's going to be the final push higher before a deeper correction, which is also going to be like a healthy move lower before the market can more freely move to the upside. Because long term, I remain bullish crude oil as everything that has intrinsic value. No disagreement there. Now, natural gas didn't manage to take the support resistance area that you see here yesterday. I mean, intraday we were trading above it. The daily close was quite negative. So far today, it's not doing much. I mean, 1% lower for natural gas is, a minuscule move, more or less. I still see a legitimate breakout here. So my bias remains long. So, there is nothing else I can add to that. The formation remains valid. Platinum still consolidating. Palladium has broken out from this channel, right? I do believe, though, that this is within the context of a larger consolidation, which is very much needed after an impulsive, humongous move higher the previous years. So I think the palladium market might be a market that's going to be needing a lot of patience. If we want to stick to the shorter term, we have had so far 3 consecutive inside days, one after the other. That's a pretty good technical signal of a consolidation. And given that the prior move was lower, I'm more or less convinced that the path of least resistance in the short term remains lower. So probably this is a consolidation that's going to be resolved to the downside, and the push lower. Now, how much lower? 1980 to 2000 is an interesting area of support. So perhaps that's going to be the next target for palladium. Now, we had a question about the euro pound. So let me pull that up. And the question about a potential descending wedge. And I do see the argument for that here. I mean, this is clearly what you're looking at, right? This is what you're looking at. Yeah, might be the case. I mean, what enhances this probability more in my mind is the fact that we managed to break through this very, very important support area. And despite having done that, we're not seeing any pickup in the downside momentum. So, yeah, that was unexpected. I expected that a breakthrough this 88.40 area should probably find a quick sell-off, towards the next area of support, which is at 86.80. So yeah, this is the type of formation we might have at hand here. Keep in mind though that in general, looking at the big context here, it is a choppy market, right? And you know, whenever you have choppy conditions, it is very easy to create multiple interpretations from a technical perspective as well. Let me give you an example. So somebody can say here, oh, this is a head and shoulders formation. Not a pretty one, but technically speaking, it ticks all the boxes, right? I mean, this is a higher high, shoulder, shoulder. The length of the shoulders is rather symmetrical. They're not the same, but rather symmetrical. So somebody can make the argument that the break through 88.40 is like very bearish, not just because it was an important horizontal support area, but because it's also the neckline of a head and shoulders formation. For the time being, just looking at this chart, what I see is an undecided market, right? And we can draw a lot of formations, but when there is lack of momentum, there is no confirmation that any of these formations matters, or it's what the market is actually looking at or has validity, right? And as I said, the fact that we did break through 88.40 and we haven't accelerated the downside yet would worry me a lot if I was short, right? So that enhances a possibility of this like being a descending wedge. But in any case, even for that scenario to play out, what I would want to see is a move above 88.70, and I would want to see a nice, healthy white candle to do that, right? So not like a slow creeping move higher that's going to take like 3-4 days to cover like 40 pips of range, right? I mean, I want to see a healthy candlestick, a strong candlestick to say, okay, something might be up now, something might be happening. This might be the formation, one way or the other. Until that happens, I think it's a market that should just make you yawn for the time being. Probably not what you want to hear, but that's what I think about it. Now, let me see what other questions we have. Yeah, Dimitris also says that this descending wedge might support the euro. Yes, that's the case. I mean, if we do break higher in the euro pound, Dimitri, that is definitely going to be somewhat supportive for the euro. We know that the euro pound is the fourth most liquid currency pair. So yes, that's definitely the case. Now, just a reminder here, Euro Aussie, Euro Kiwi, they still remain bearish, right? I mean, they look differently. Euro Kiwi is at new lows, but at the same time, they look the same. In what sense? They've both broken down and they both have bearish price action, because even this type of rebound higher, if you're asking me, it's part of a bearish price action, right? Because it clearly seems like a corrective rebound to me in a downtrend. There it is. Okay, so I would be very, very careful trying to take the other side of the market here. And once again, these pairs are also making me even more cautious with the stock market. It's like, the whole market is up to something for the time being, that the equity traders are not just sniffing out yet. I have to include them, actually, the crude oil traders as well. So I'm very, very skeptical here with equities, very, very skeptical. You know that I've been bullish equities, not long, but bullish equities for many months, because I thought the path of least resistance is clearly higher. But now we've reached the point that I think it's very dangerous, and we might be very, very close, if not already at a turning point. I'm not expecting a long-term top. I'm not expecting like the top and the markets to like, get dissolved and roll over and like lose 50% or anything dramatic like that. But I am expecting a healthy, sharp, rather deep correction lower. It can be like 10, 15, I don't know, even 20% lower before we can actually, resume the stupid uptrend. We had questions also about the pound Aussie, so I can continue this and speak about the pound Aussie and the pound Kiwi. Listen, the pound Aussie and the pound Kiwi clearly holding much better, right? But as I was saying yesterday, the fact that the pound Kiwi gets rejected again and again and again from the broken long-term channel trend line support, which is acting as resistance, literally just prevents me from turning bullish this one, right? So as long as this trend line is holding, I have to remain bearish. In the case of the pound Aussie, we have held this trend line support, but given the fact that Euro Aussie has broken down, pound Aussie, Euro Kiwi has broken down, pound Kiwi has broken down, and the fact that the rebound so far is, completely unimpressive, having to do with momentum, makes me very, very skeptical about the rebound in pound Aussie as well. Very, very skeptical. Right? And be careful, because as you see, we're testing resistance in this rather tight ascending channel. So I'm very skeptical, especially if equities roll over, as I expect there is an okay chance for that to happen. You should expect pound Aussie to just, turn lower and accelerate. So if I had to take a position here, bottom line would be to the short side and not to the long side. Although it's better to wait for this channel to break, right? I mean, if you want to be short, why not just wait for this little channel to break and then sell it? Okay, I think we've covered more or less all questions. So
Well done. Great.
thank you, everybody, and we'll see you again tomorrow. And as you very well know, Blake has the daily roundup in a few hours. And as I said before in phase one, don't forget that there is now in the news feed, at the top of the news feed, there is the live Squawk voice widget, which you can activate for a 10-day trial, completely free of charge. It doesn't even auto charge your renew unless you click on it and tell it to do so. So I suggest you give it a spin and see if you like it. If you like it and if you think it adds value, you can subscribe to it. As I've said before, we get $0 out of it. They gave us a 10% discount in comparison to what they gave to retail clients, and we're just passing all of it to you. So if you like it, take it. If you don't. Okay, have a great day.
Thank you, Steve. Thanks, everybody.
Bye-bye.
Bye-bye.